This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. So today I'm going to talk about the stock market. I'm going to start with an S&P chart I call my timeline chart, and then I'm going to go through the price and momentum conditions on the monthly, weekly, daily, and hourly of the spider. So let's go ahead and get going. I mean, we're in a really difficult environment right now, and I want to just focus in on something. So I call this my timeline chart because I've got a 18-day moving average, an 18-week moving average, an 18-month, and a quarterly 18, and then a yearly 18. All of these are overlaid onto this daily chart. Okay, the purple line is the yearly 18, the red line is the quarterly 18, the yellow line is the monthly 18, the blue line is the weekly 18, and this purplish magenta colored line is the daily 18. Now, the reason why I wanted to show this week is because if you notice, we've got this declining. Now, I've brought this up in the past intermonth, and I think it might have even been, I'm not sure, maybe it was at the low here where it looked like it was starting to turn down, but we never have gotten this thing. So we've only got a week left in this month. If we finish off the month without any kind of a real substantial rally and we stay, but I think the pivotal level is right around 4,000. This will continue to be declining and it'll close declining. I think that's actually pretty important. If we're below a declining 18 month and we're below a declining 18 week and we're below a declining 18 day. We've got three time frames all in unison. This has not been the case. You can look at all these times. So we turned down here and we had these two lines declining, but we had an uptrend on the monthly, and that's where we found support. So if we get this to turn down, stay down for the next week, it's a very high probability we're going to come down towards this 34 to the 3,500 area as the next target. You can see the volume sort of picked up, obviously having to do with the Fed this week. So the question becomes, how does this play out? Because as I mentioned last time, it wouldn't surprise me to see them try and rally this. We've got RSI divergence in place on the daily chart. I mean, it's possible they'll try and rally it. And I think if they stay below 4,000 and form some kind of a bounce and then turn it down, I think that would be incredibly bearish. Now, if we can somehow mount a charge here from here and turn this around and get this back up through 4,000, look at what happens. We get back above the 18-day, number one. We get back above the 18-week, number two. And as I said, this line will no longer be falling. Okay, those are three pretty important criteria without even looking at momentum yet. So I'm keying on the 4,000 area. I mean, I would just keep watching. I could be wrong, but I think it's 4,000 at 3,900 coming back up through here. I don't think that does enough to switch this back up to flat. And it's still going to be below these moving averages. So we really need to see this back above 4,000 before we can expect anything meaningful. But the key thing here is that we're starting to get this closer to this quarterly line, which I think is starting to make a little bit more sense. Now, one thing I'll tell you, in the past, when we get to this line, it's usually in a violent manner, right? I mean, it doesn't happen like in an orderly fashion and then we just hit the line and then, we find support and turn around. Usually there's some kind of a spike involved. I mean, obviously we blew through it in 2020, but then it was a pretty quick turnaround. We held it in 2018, never got to it in 2016. And if we come back here, so this in 2008 and 2009, we actually not only broke the quarterly line. See how this played out? So this is pretty important. We broke these lines. We finally turned broke the 18, and then came all the way down and held the quarterly line, and then failed at the 18-month. And then on the way back down, this broke the quarterly line. So it's playing out a little bit differently, but these lines are still acting. They're incredibly important. I mean, you got to know where they are, and then look at how it broke and then rallied up to the declining 18 and the quarterly line and then end up blowing down through the yearly. I mean, this is pretty rare. We don't get this to happen very often. We can look at this from a historical standpoint. In 2002, it did. In 2003, down here, it didn't even get to the yearly line, but it did get well below the quarterly one. So just thought I'd bring you up to date on that in terms of what we'd expect. I mean, right now we don't have. So let's go and look at this chart. So there's a few things missing for a bottom still. When this happened here, and we got a pretty good push off the low, I was willing to accept this as the possible climax, even though we didn't have the volume action that would really consider it to be, climatic activity. I mean, I knew it wasn't a climax from that standpoint, but sometimes the ADX, you get these ADX readings that are pretty high, and it can cause enough of a bottom that we can make a low and go sideways. But the thing that's a little disturbing here is our failure at this downtrend line, right? And what I don't like about what's going on right now is not only did we fail at this trend line, but now we're below a declining 18-month. I mean, I just keep repeating this, but I know it sounds ridiculous. But the fact is that below that line is usually pretty significant danger when it's declining. And when it comes to stocks, if I have someone who's been long a stock for a long time, and it's been holding the 18-month, and it breaks the 18-month, and the 18-month rolls over, and then it rallies up to it and fails, I have institutional investors that I'm basically telling this is a sell signal. This is when you get out. When it breaks that line, you have an 18-month and you break it, and then it rolls over. So that's basically what's taking place here. It's a bit of a concern. Support is 34 to 3,500. Now, I mean, again, I think stay on your toes right now. They're going to probably try and rally this, I think. I mean, I think that's the highest probability. If we can't get through 4,000 though, I think the bias is to the downside, and you got to continue to be very, very defensive at this stage. All right, that's the update for the week. Go ahead and post any questions or comments. Thanks.